Yeah, thanks everyone. Good to be here and presenting on behalf of Fortune Bay. We're a gold exploration and development company with a unique set of assets at a very special time in the market. So I'm going to run you through our story and save time for a bit of questions at the end. We'll be making some forward-looking statements. Those are available on our website and our corporate deck, should you want to view those in any more detail. So just a quick corporate snapshot to get us started here. Experienced management and board team across the various sectors, from technical to capital markets, good on the governance side. Really deep technical expertise, including myself, background in exploration geology, worked as a mining executive for many years, came across from Denison Mines, a Lundin Group company, to see a unique opportunity with Fortune Bay. It's taken a little while, for the cycle to really arrive, for us to get moving and unlocking value on our assets, but the time is now. And we've done this with keeping a really tight share structure, just 58 million shares outstanding at the moment. We're trading around just over $1 and a market cap of only around $60 million at the moment. So why now and why gold developers? We are a gold developer, although we're looking to derive a lot of future value through exploration as well. But obviously, I don't need to really talk too much to the gold macro fundamentals here. The case is largely made, but gold developers really do have maximum leverage in these cycles. NPVs, IRRs rise sharply with gold price increases. They also have opportunities for resource expansion, brownfields opportunities to add more gold to the projects, expanding known deposits, and then real re-rating potential as we see capital start to rotate, from the fully valued producers down to the developers. I don't think that's started yet. We're sitting, with around 3 million ounces across our projects and a market cap of only 60 million. Lots of value to unlock there. I think in this cycle, we will see more disciplined M&A. That's certainly some of the themes coming out of conferences like the Denver Gold Forum, but there's going to be a need for good projects in stable jurisdictions. Particularly in high gold price environments, we see governments, communities try to take some more of that upside, and you're going to have a lot of miners looking to get into safer jurisdictions. And then, developers really sit in that strategic sweet spot between those high risk explorers with no ounces in the ground and those producers that are fully valued, with the ability to create a lot of news and catalysts through exploration, de-risking, and really realizing potential on assets. Just so maybe just turn to the chart on the bottom right, just showing the general theme of reserve depletion and the need for new resources, and particularly in stable jurisdictions. I think it's a very attractive time in the market to be advancing gold assets toward production. So why Fortune Bay? Our assets, we have two main gold assets, which is really the focus of the company. The Goldfields asset in northern Saskatchewan has around 1.2 million ounces in current resources. If we go down to Mexico, other gold projects, 1.7 million ounces across the board in historical resources, and obviously looking to put those into current in the near term. So 3 million ounces across the projects, a really enviable resource base for a junior company. We also do have uranium projects. Those were generated at a time when the gold market wasn't quite here. We saw some clear opportunities for low-cost staking on the northern rim of the Athabasca Basin. What a great place to be for uranium exploration, very underexplored in that northern rim. We acquired those projects. We did a little bit of work, but it put those into partners' hands. So they're non-diluted to the company. They run themselves. We actually generate some revenues through exploration or option fees and management fees. What we're trying to do as a business, if you look at the chart on the top right, is really generate value and create as much value as possible through that steepest part of the Lassonde curve. And that's through exploration, resource delineation, and early development work. We have two projects there where there's a lot of value to unlock through the exploration, early development phases. Goldfields perhaps further along on that curve, but still lots of work to be done there. And then Pomerosa in Mexico, just a transformational discovery potential opportunity. The bottom chart on the right just shows our history against the backdrop of the gold and uranium prices, and what it's been as a real long and deliberate wait to unlock the value on these assets. The projects were spun out into the company in 2014. We started work 2020 when the gold price started to move up a bit, but sort of held off. The market wasn't there. But now's really time to accelerate our story, unlock these values, and have been done all this with just 58 million shares outstanding, no rollbacks over time. The story in the uranium is quite similar in a way. We got into the cycle before it really came, saw the fundamentals, got some opportunities there, and have some terrific projects that are undergoing exploration through partners, through being partner funded. In comparison to peers, this is a little bit outdated, a few weeks here. Things are changing quickly in the gold space, but on a resource multiple, in other words, our US dollar per ounce of resources in the ground, we trade at a significant discount to peers. We haven't been out marketing, doing a lot of work when the market wasn't there, sort of blowing up our capital structure. We're starting to do that now, and we believe there's tremendous re-rating for us to attain the values we see amongst our peers, or if not higher, based on the quality of our assets. What we're looking at there is just Goldfields only. Today it's probably a little higher than what's shown here, which was around $17 an ounce, probably, but it's higher than that. But still, Goldfields only, the company's undervalued. If we look to bring in Pomarosa, those 1.7 million ounces into current resources, we're going to trade at even bigger discount to peers. So a lot of significantly undervalued, we believe, and a real re-rating opportunity as we start to advance the assets and get our company firmly on the map. On the share count basis, if you look at us compared to peers, very tightly held, and that's by a large margin. So we know what that means, and it's just more talk on the share price as we add value to the company. So taking a closer look at Goldfields in Saskatchewan, a real robust development asset in a top-tier jurisdiction. It's got resource growth potential. That photo just shows that ridge there is the box deposit. It sticks out of the ground. It's shot full with quartz veining. There's visible gold in it. That's the old historical head frame from World War II era, from a small underground mining operation, just 60,000 ounces pulled out during that era, but also showing the power line, which still runs to site. It's not active at the moment, but can be refurbished from later studies to provide power to the site. Well, we recently released an updated PEA for the project. That was in September 23. PEA stage projects are normally characterized by higher risk type projects, earlier stage. What we're looking at Goldfields is really a de-risk development platform, and I'll explain why. Firstly, the resources used in the updated PEA mine plan, and 97% of those are in the higher confidence indicated category. What that means, we can take those directly to reserves in a PFS study. We don't need additional drilling. Drilling is a lot of time. It's a lot of money. We don't have to take those steps. And we have a lot of confidence in that resource estimate, knowing that it reconciles to within 1% of the historical production from mining that took place previously. It is in an area that has historical mining. There's been gold mines, uranium mines in this area, dating back to the World War II era. Most recently, big rehabilitation programs in the area on the uranium mines. It's federally funded, but there's lots of civil contractors in the town of Uranium City, lots of heavy machinery. It's a community that understands mining and are looking for the next project in the area. It has the infrastructure has been built around the mining industry, which includes a road to site. It's a government-maintained gravel road. There's that power line to site, which I showed you, and then a really large airport that has scheduled flights a few days a week to places like Uranium City. The permitting is well advanced in that we have an approved EIS. It's a provincially approved EIS from 2008. That was acquired from the previous operator. Those permits don't expire. It's still valid today. That's been confirmed with government. And the project was permitted back then for an open pit mine at the box deposit and a 5,000 ton per day mill. Established community relationships. We have, since working there in 2020, we've built strong relationships with the community. I knew the importance of that coming out of Denison Mines, working extensively in Saskatchewan. We've built those relationships. We formalized those in an exploration agreement in 2022, and that provides consent up to and including a definitive feasibility study. And of course, being Saskatchewan, I personally don't need the Fraser Institute to tell me it's a top jurisdiction, because working there 12 years, you can see the support from governments, communities, etc., for the mining industry. The mineral resources at Goldfields is made up the Box and Athona deposits. Box, the larger deposit, comprising about 80% of the resources, around 1 million ounces in indicated, 200,000 in inferred. That grade really stands out for an open pit project at almost 1.3 gram a ton in the indicated category. What's shown here is the actual resource models, with the updated PEA open pit shells. As you can see below, these are the grade models. They're actually not the resource models. The grade model, the resource model goes just below the pits, but the full grade model is not captured in the resource yet. So lots of potential as we go deeper down in terms of underground potential. And I'll talk to some of those high grades we're getting there from drilling in 2021, which need to be expanded upon. And also to mention, this ranks among the highest grade open pit developments in the Americas. The strip ratio is also extremely favorable. I certainly haven't seen a better strip ratio across open pit projects at 3:1. The mill head grade is outstanding at 1.2 gram a ton. The gold recovery, 95.4%. That comes from a very standard conventional process through gravity, crushing, gravity, and then CIP. The metallurgy or mineralogy on the project is extremely simple. It's mostly free gold. There's a little bit of gold occurring around pyrite. That's a sulfide, but that sulfide content's very low at about 0.2, 0.3%. Very little to no deleterious elements identified. So it's a very clean, simple ore that lends itself to a conventional processing flow sheet. We believe that recovery can be improved from 95%. We've had some data indicate that already, and just some more variability testing work needed to improve recovery on the gravity side. And over life of mine, 900,000 ounces payable. What's shown here is the Box and Athona open pits. On the bottom, the waste rock stockpiles. There'll be high-grade stockpiles near that central processing plant, and a low-grade stockpile that will where all will be reclaimed from later in mine life. A dedicated tailings storage facility, which is necessary to support that high gold recovery, and then utilizing existing infrastructure through that access road and the power line. The economics for the updated PEA, which was released in September 2023, show robust economics across a range of gold prices. The base case at $2,600 an ounce, shows an off-tax NPV of $610 million. As we move to what we call our spot gold price, which was the low of the gold price on the Friday before we announced the PEA, we used $36.50 an ounce. That's produced an after-tax NPV of around 1.25 billion Canadian. If you put in a $4,000 or $4,200 gold price, that goes to $1.6 billion after-tax NPV. So nice sensitivity to gold price. The capex is modest at $300 million, which includes a contingency of $50 million. All-in sustaining costs competitive at $1,300 an ounce. The throughput's very key to look at here. This project does produce better economics with higher throughputs as we move to 7,500 or 10,000 ton per day throughput. We didn't go out here to put the splashiest numbers in front of the market. We went out here to set the stage for the development of the project. What that 4,950 throughput does is it allows us to stay below the trigger for federal permitting. So we can keep the permitting in province. We can leverage our existing EIS and advance this project a lot more quickly and a lot more cheaply, avoiding the federal permitting process. So that's been the whole rationale and strategy behind this PEA, is to have an executable project that can be achieved in the shortest space of time. And then obviously that throughput also producing a longer mine life, which is attractive from a financing point of view. In terms of this expedited path to production, I've mentioned we're going to keep permitting in province. We're going to build upon the existing 2008 EIS. What is needed to happen to that permit is there has been a time lapse since that 2008 EIS. So what we do need to show regulators is nothing has changed in the background conditions. So all we need to do is validate the existing data. And then we are looking to expand upon what was originally permitted, and that's also mining of a Athona, and also that the tailing storage facility to produce that higher gold recovery. So those would be amendments to the existing permits. We started the baseline studies this summer to get ahead of everything, knowing how that PEA was going to shape up. So we got teams in the field; those are shown on the bottom right, and we've started collecting the data to validate those data sets with a view to engaging with regulators in early 2026, where we'll submit a project description, and that's going to set the clock on the permitting side. We'll be able to provide some more guidance on timeline to construction at that stage. And also important on the community side, we have those existing relationships, but we'll start the project development consultation coming up here in November. We'll do a community tour to get feedback on the design of the future, the mine. In terms of resource growth, we're very excited about this aspect of the Goldfields project. As a company, we've known about these opportunities for some time. When your market cap's down, it's highly dilutive to go raise money and go after drilling targets. We're in a position now where we're able to do that. We did announce a bought deal financing for $8 million on Monday, and that includes a $2 million component of flow through, which will give us approximately 5,000 meters of drilling, giving our drilling costs around $400 all in. So we see a tremendous opportunity to go after these targets and demonstrate the resource growth potential of this project. At the Box deposit, we have tremendous potential down dip of the existing resource and the open pits. You see grades there of around 9 gram a ton over 5 meters, 13 gram a ton over 8 meters, and 8 gram a ton over 12 meters. Those are just some of the highlights of the drilling we did in 2021. And what's happening down dip of Box is in these structures or vein sets, we see these high grades. We don't have enough drilling yet to show they're continuous. Those types of grades will certainly support underground potential. What we need to do is do some infill drilling there, demonstrate continuity, and then we can start to evaluate stopes from an underground potential. What's really exciting there is that deposit just keeps going. There's one hole drilled between Box and Athona in 1988. You'll see it in the middle of between the two deposits, LB 88, 3 gram a ton over, 4 gram a ton over 3 meters. It's described in the same unit as the Box deposit. It's a hematized mine granite. To me, it's the same mineralized body going right across that syncline. Remember, we're quite far below surface, so don't look at that lake as if you can't mine there. You can certainly mine underground. That in that bay, it's only 20 meters or so thick. There'll be potential to explore higher grades throughout that peninsula toward the Athona deposit. Need some initial targeting to see, the types of thicknesses, grades one can get before additional, delineation would be drilling, but certainly attractive exploration target. And then at Athona, there's some low-hanging fruits in terms of that blue body you see. That's Athona West Mine granite. It's got similar grades to Athona, but hasn't been brought into resources yet. Just needs some additional drilling. In our exploration targets at Frontier, there's SMDC, another company held that project, back in the day. It was never going to make it as a standalone project, but now was consolidated into Goldfields by the previous owner and hasn't been drilled since the historical drilling. There are a few holes in there, but some with some really nice high grades and also some underground adits, which suggest some real potential to build a resource there. What it's needed, some validation of those historical results, and then stepping out of drilling along that body, which looks very much like the Box deposit, although it does look to be smaller. And then at Golden Pond, a really nice high-grade vein structure there that clearly has an orientation to the northwest. Putting that in 3D, it's clear it hasn't been drilled out the strike extension. A nice opportunity to add some ounces from that occurrence. And then Triangle tested previously a vein or a set of veins. The previous operator, I think, just looked like they went down dip on it, missed the vein entirely. Needs to be drilled properly at a high angle to the mineralization and form part of the exploration targets that we expect to drill starting early next year with a drilling program. We already have a drill rig on site and 3-year exploration or drilling permits in hand. So with Goldfields, we're advancing with our plan. And just to recap, a resource growth drilling program. I think we're going to go more than 2 to 3,000 meters here, but certainly enough to cover a lot of our initial higher priority targets. Pre-feasibility study, so working on certain key de-risking studies needed. And we've certainly started those in terms of some waste rock characterization. We did a LiDAR survey, wrapped up this week. And then the permitting side, a very important part for the project. We did recognize that as the critical path to get done, because PFS, FS, because of the legacy of so much historical data, we feel we can work through the engineering side quite quickly, and the permitting side are very critical to get underway. So we'll look to engage regulators early next year. Mexico is a real transformational opportunity for us, a project that's been around for a while. It's been dormant for 15 years, and again, held strategically for the right cycle to advance. It's located in southern Mexico. It's 100% owned. There are no royalties or encumbrances. And it's a geological setting that parallels most of the giant porphyry systems worldwide. And I'll elaborate on that. But before I do, it is important we reach agreements with the local communities. They hold the surface lands, and we're required to establish exploration agreements with them before exploration can commence. We've been working at this sort of more earnestly since May this year, and things really picking up more recently. We have received a strong support from the landowners themselves for moving this forward. There is a process in Mexico, and we do want to do it right. There's a legal process that is set by the Procuraria Agraria, a set of laws that we have to go through the consultation process with the communities and other stakeholders, and that process remains on track. Whether it's weeks or months, I can't say exactly, but we're very confident we'll be able to get those agreements in place and then advance with our exploration plans. The project setting is a lot of people say world-class or top tier, and these definitions get used very loosely in industry for sure. But the setting is world-class. And what we know is that giant mineralized porphyry systems form where these aseismic ridges, oceanic plateaus, or seamount chains are subducted below continental plates. And what's shown here is just a simple Google Earth image. And on the top left there, we see Bingham Canyon. I'm sure everyone knows that one. It's one of the world's greatest ore bodies. And that's formed as a result of that subduction of that Mendocino fracture zone, which is an aseismic ridge below the North American plates. As we scan down that western seaboard of North America, and if you look carefully for that next big aseismic ridge, it is the Tehuantepec Ridge being pushed below the North American plates and giving rise to the large porphyry system that sits below our project. If you look at that mag image on the right, you'll see that giant bullseye anomaly. That is the porphyry system. It's the only one related to that aseismic ridge. And then we can see other world-class examples like Cobra Panama, Cascabel, which are more related to oceanic plateaus than aseismic ridges. What's key about Pomarosa is that 1.7 million ounce in historical resources isn't the porphyry. That's the epithermal, the cover rocks that sits above the porphyry, and the porphyry system has not yet been evaluated. So we zoom into the geology more. We see a plan map here and a section as well, and we can see that the porphyry system is interpreted to span approximately 20 kilometers. And on our project area, it's sitting just above it are these reactive cover rocks, and they've been favorable chemical traps for the epithermal mineralization found to date. That includes the Campamento deposit and some numerous other prospects where we can see some really exciting intersections obtained previously. At Campamento, the deposit, 100 meters at 12 gram a ton. Sierra Lamina, a hole drilled by Kinross, is a hole at 600 meters at 0.3% copper, 0.7 gram a ton gold. That starts from surface, it ends in mineralization. Caracol's another prospect there, 70 meters at 1% copper, 1 gram a ton gold. And then numerous other prospects where we believe we can continue to expand resources. If we look at the project in a little more detail here, just those colored symbols are all the downhole assays plotted on the drill traces, showing in green greater than 0.3% copper, and in yellow greater than 0.3 gram a ton gold. It's been hard to draw a hole on this project without intersecting some form of mineralization. It's a very metal endowed, target rich environment. What's shown there as well is Campamento. That little pink outline shows the entire footprint of that 1.7 million ounces. As we move into this gold cycle with increased prices, cut-off grades get lowered, and it opens up a whole range of opportunities across this project where we see multi-million ounce gold potential just in the epithermals in those cover rocks without getting into the deeper testing required for that copper gold porphyry system. So we see a tremendous potential there. We do see already targets we'd like to test just from the soil geochemistry we have to date, the pathfinders, but we are wanting to step back, do some geophysics, better understand the structure, the nature of the system before we embark on any serious exploration to expand on the porphyry gold, but on the epithermal gold, but also to start testing the porphyry system. Just from a mineral resource potential, once exploration agreements are in place, we plan to do a current tech report for the project that will bring the Campamento historic resources into current. So there's 1.7 million ounces gold in historical. Cerro Lamina was drilled previously by Kinross. We've had an independent QP confirm there's enough drilling there for an inferred resource. So we'll look to release a maiden resource for Cerro Lamina as well. We've got all the core, the pulps are in really good shape. So we'll be able to do some check assays on both deposits, no drilling needed, and then we can put current resources on the books and establish a resource base for the project on which to expand. And just quickly on the uranium projects, these are some really exciting opportunities. We've elected to put those in partners' hands, but then the right geology for discovery on that underexplored northern rim of the basin, with the geology support discovery like a NextGen or Triple R, but obviously non-dilutive to us and allowing partners to get on with the exploration, which is ongoing. So, just wrapping up, a tight share structure, the right assets, the right plan. You can expect lots of catalysts and news flow ahead. We've recently announced a bought deal Monday, $8 million. That's going to go into funding work. That's going to release catalysts for moving the project forward and the right team to execute on this responsibly. I probably only have time for one question. Yeah, well, that wraps it up. If anyone has any questions, feel free to grab me at any time and happy to answer them. Thanks, everyone.